Tonight we are live from Rotterdam, London, Devon and South Africa. Welcome to StockBox Premiere, where for the next 90 minutes we're giving you the opportunity to put your questions straight to the directors of 3 London listed companies. It is ever more important as investors that we take ownership of our investments and research companies in order to increase our success. And we hope the information in tonight's show will allow you to make an informed decision on your investment, build the picture, conduct your own research by asking questions tonight, and understand ultimately how the companies and the directors plan to deliver returns for shareholders. The 3 directors joining us tonight are Ben Turney, the CEO of Kavango Resources, that's the ticker KAV, James Campbell, the Managing Director of Botswana Diamonds with the ticker BOD, and Lester Kemp, the Chief Operating Officer of Technology Minerals with the ticker TM1. The format, as usual, is to begin with a 10 to 15 minutes project-specific interview, followed by an open Q&A session for 15 minutes. And this is your chance to put your questions directly to the director speaking, or simply join in the conversation by using the YouTube live chat or hashtag StockBoxPremiere over on Twitter. It's worth saying that the directors are bound by market rules, but they will do their best to answer your questions as best they can. So to kick us off tonight, we would like to welcome our first guest, and that is Ben Turney, the CEO of Kavango Resources. Good evening, Ben, and welcome back onto StockBox Premiere. This is your second appearance. How are you?
I'm very good, thanks, Mark. How are you?
Yes, very good, thank you, Ben. Thank you very much for joining us again. Now, the subject that we're talking about with you tonight is a little bit interesting, and it's what you requested. It's target acquisition across the Botswana portfolio, and it's something that you wanted to focus on. So let me first of all ask you, what exactly do you mean? What does target acquisition mean, and what work is involved?
Well, we've realised over the last few months, Mark, that we've had a bit of a gap in our communications recently. In the past, we've gone to great lengths to talk about our strategy and our next steps. But I've got to be honest, in the first half of this year, we've just been so overwhelmed with work internally within the company that our comms has fallen a little bit by the wayside. So what I wanted to do this evening was to introduce this concept of target acquisition. We've talked a bit about it in the past, but not in as great detail as I'm going to talk about this evening. And target acquisition really follows on from our proof of concept campaigns that really has sort of summed up our exploration strategy across our projects over recent years. Now, we feel that we're at a stage in the business where we've tested various technologies, we've tested our partnerships, we've tested our capabilities in the field. We've got a number of things that we've recognized we have to improve. We've made a number of mistakes along the way, as you would expect, but we've also made a lot of very good decisions as well. So now what we're looking to do is to build on the progress we've made across our project portfolio of 3 major project areas. And really our focus now is building our portfolio of drilled targets. In this market, in particular, I'm not talking so much about equities, but more metal prices. Now is the time for companies really to push ahead and make discoveries. And with feedback that we've had, potential partners that we've spoken to, potential large-scale investors we've spoken to, what we're really focusing now is building up our portfolio, our inventory of drill targets, both in terms of enabling us then to go and drill these directly ourselves, but also with a view to marketing these to attract in much larger interest. We've got 14,500 square kilometres of ground. It's highly prospective, spread across the Kalahari Copper Belt, the Kalahari Suture Zone, and down at Ditau. So we've got some fantastic ground to go for, and it's really now about us focusing in on, where are we going to go in the specific hunt for mineralisation.
Okay, so this is across all the projects, and this proof of concept is across all the projects. What ideas are you coming up with then? How's the work going?
Well, proof of concept is pretty much complete, and I've got a little presentation. We could show some slides if you like. But proof of concept so far has gone extremely well. As I said, with a lot of lessons that we've learned, things that we've needed to fix and address, but also really good decisions that we've made that we can build on, particularly the use of some of the geophysical remote surveying techniques that we've used have proven to be highly successful. So now it's a case of really expanding those programs out and leveraging off the progress that we've made so far.
Okay, well, if you'd like to show us your slides, we can add them in, and you can take us through the kind of things that you've been working on.
Thank you, Mark. So I'll just leave up the disclaimer. So In tonight's presentation, it will be fairly short. I'm going to go over exactly the progress that we've made. I'm going to talk a little bit about our project portfolio, what exactly it is that we're looking for, as well as looking at some of the techniques that we've tried and tested out in the field, and also looking at what our next steps are. We know that a lot of our investors are very keen to know, well, what are the next steps? What are you going to be reporting on? So this evening, I'd like to address some of those questions, and of course, welcome any questions from shareholders afterwards. Just a very quick slide on our current market cap. Our current share price is about 2.4 pence. Personally, I believe we're priced to fail at the moment. I think if you look at the ground that we've got 14,500 square kilometres, as I mentioned. It is highly prospective. But at the moment, what the market is telling us and telling you is that they don't expect we're going to succeed. We disagree, and I think with tonight's presentation, what I'd like to do is just explain a bit about exactly what it is our approach is. We're well financed. We just recently raised £750,000 in what was quite a heavily oversubscribed placing. Now, a lot of companies will claim to have had oversubscribed placings. That tends not to be so true. In our case, we actually scaled back by 45%. So we wanted to minimize dilution down at these levels, but also we raised enough capital to see us through into next year, where, as you can see from this slide, we've got a very substantial warrant bank. And over the course of 2023, we have about £8.5 million worth of warrants that are due to expire in 4 separate tranches. Now, this is a financing strategy that I've deliberately put in place. I've not talked about this so much publicly before, but I think now is the time to start to introduce this to our shareholders. This has always been my plan all along. I wanted us to enter into 2023 with a very clear runway to financing on the basis of us obviously having success in the field. So we're very much looking forward to the second half of this year and delivering on our programs, which I'm about to tell you about. So, very quick introduction to Kavango, because I'm sure that many of you already know. We have 3 major project areas. Our flagship project is in the Kalahari Suture Zone. This really is our blue sky project. Here we're looking for nickel, copper, massive sulfide deposits. Now, obviously, if we're able to discover one of these and open this region up as a new nickel, copper, sulfide mining district, then of course this would be absolutely immense for a company of our size with a market cap currently of £10 million. It's a technically very challenging project. It's reliant completely on geophysical technology, so we're using a combination of what's called AMT and TDEM technology to identify drill targets. And we recently completed a 3,300 metre drill campaign here, which was our proof of concept, looking to extract drill core, really to act as a constraint on our geophysical models, but also to teach us more about the geological systems that we're targeting. Up in the Kalahari Copper Belt, we've got 5,500 square kilometres nearly, spread across 2 joint ventures. Now, this is our most exciting project, we think, in terms of the exploration potential, where the chances of success in the KSZ, they are lower, but of course the reward is much, much higher. In the KCB, we're treading well-trodden ground. The exploration model there is well-defined, well-established, so we're not having to innovate. And we've picked up ground that we believe is in the heart of the belt, which has got great exploration potential. And because there have been sands over this area, it's been relatively underexplored. We're looking forward to producing some updates on this in the very near future, with drilling to commence a bit later on in the second half. Finally, down at Ditau, this is our rare earths project. We're currently completing a drill campaign down there. We've drilled 4 holes so far. The 4th is nearing completion. We've drilled about 1,600 metres as of this evening. And we're looking forward to publishing results, in particular from hole 004, which has provided us with some very interesting looking cores, about 28 metres of a rock that at the moment no one has been able to identify, but we believe is a potential precious metal lead. So I want to talk a little bit about our geological setting. Now, I've pulled these 2 images from previous presentations that we've published, and I think that this is something that's overlooked a lot by investors and the market. We always talk a lot about why our ground is so prospective, and so what I'm trying to show you here on this slide is why we believe that the KCB, the Copper Belt, and our ground in the Copper Belt, and of course the KSZ, the Kalahari Suture Zone, why they are so prospective. In the Copper Belt, this map pretty much speaks for itself. You can see in the northeast of the belt in Botswana, there are a relatively large number of concentrated discoveries and mines that have been set up. Meanwhile, over the border in Namibia, you've got similar activity over there, where you have a number of discoveries and, of course, a number of historic mines, some of which are quite large scale. In the middle of the belt, you have what looks like a dead zone, but it stands to reason, and we believe the geological formations, which are obscured from view, are the same as you experienced up in the northeast of the belt and further to the southwest down in Namibia. So the ground that we've picked up in the middle, we believe is highly prospective. And we've got some updates that we'll be producing on this very soon. But to all intents and purposes, we believe we're looking at the same controlling formations and exactly the same deposit styles, these copper-silver deposits that, of course, have proven to be so successful over recent years. Meanwhile, in the Kalahari Suture Zone, what really attracts us to this area is there's clearly been so much tectonic activity and underground activity over millions and even billions of years. The Kalahari Suture Zone is marked in yellow, this sort of fault line running from north to south. But what you can see is an idealized view of a number of the regional faults that run through and intersect the Kalahari Suture Zone. Now, the reason we believe that that is so important is it's these areas where the Earth's crust has split and contracted and come back together, where you've had huge amounts of magma that have passed through to surface at different times in different phases. Now, of course, the magma brings with it the nickel and the copper and other elements from the Earth's core. And it's these areas that around the world have tended to be the most prospective for these very large scale nickel copper sulfide deposits. Now, this map in particular, we recently released on our IOCG presentation, which Jeremy Brett gave us. He's our lead geophysicist on this project. But it really is a very compelling map that shows exactly why this is the right postcode in the hunt for these large-scale deposits. And what's worth mentioning about Kavango is that we've got the strategic hold over the entire KSZ. It's split into two areas, KSZ North and KSZ South. The ground that's in the middle is pretty much a transnational park. So in other words, from an exploration and a mining perspective, it's a no-go zone. So for a company of Kavango's size, with the progress that we've made, and particularly where we've deployed this advanced, quite sophisticated technology, we really do have a leading edge in this. And if we are able to get some more exploration success over the coming months, then of course we expect that will be a significant driver for our market cap. So on this slide, it's something we put together today. I've tried to explain exactly how our exploration process works. It's an iterative process which starts off with proof of concept. About 70% of Botswana is covered by Kalahari sands. Now, this presents both a fantastic opportunity because the region's geology is obscured from view, which has meant there's been very limited historic exploration, despite the country being so prospective, in particular for base metals. But the challenge, of course, is that because that geology doesn't come to surface, it means that a lot of traditional exploration techniques aren't so effective. This is why we've relied on technology to the extent that we have, and why we've refined our internal processes and our exploration methods to try and build up as clear a view of the underground subsurface geology as we can before we start drilling. Now, one of the big limitations and drawbacks with this kind of geophysical modelling is that a lot of it is basically reliant on educated guesswork until you're able to get drill core to act as a control on the assumptions that you make. So in essence, the models that we build, they're built around sort of say these assumptions, but you then test these models with the physical rocks. And that's what we were looking to achieve with our recent proof of concept campaign in the KSZ. The same principle applies to our Ditau project. So this current drill campaign that we're running at Ditau, it's exactly the same. We're looking to extract drill core to act as a control on the models that we've built and to confirm for us that the technology we're using, and in particular down at Ditau, we're using this controlled source AMT that's giving us quite a clear view of the stratigraphy, so the rock layers. And so far from what we've seen, we're very excited by the results so far, because what they're telling us is that the AMT technology is working, which obviously will then lead to much more extensive surveying. Now that takes us into this phase 2 target acquisition, and that's what I'd like to talk a bit more about this evening. So in the KSZ and at Ditau, the technology that we've deployed and the surveys that we've run, we've had fairly limited coverage across these two project areas. Between the two of them, it's about just under 10,000 square kilometres. So there's a lot of ground for us to cover. And Kavango historically has been fairly limited in terms of the funds it's had available to it. Now, over the last 18 months or so, we've had much more money available to us. Our fundraising strategy has been extremely successful. And we believe we've deployed that money into the field very smartly. We've demonstrated a lot, and we've made a great deal of progress proving our technology works. And what we're now moving into is a much more expansive, much more extensive exploration phase, where we're doing much more surveying. So we're deploying the technologies that we've used successfully with the lessons that we've learned, both internally and also with our partners. And what we're looking to do across both of these project areas is to build up an inventory of targets, which will then rank according to priorities. Now, that's very significant for two reasons. On the one hand, by having these ranked priority targets, it gives us the opportunity to go and drill these targets directly. But of course, for a company of our size, we've got fairly limited funds available to us. So while we will be out drilling again, and we have an excellent drilling partnership with Equity Drilling, so we will be mobilising the rig again a bit later on this year out to go and test more targets, it would obviously be optimal for us to attract JV partners. And at the moment, I'm spending a lot of my time as CEO talking both to larger scale investors and to JV partners as well. So we're in a number of discussions that are live right now. I wouldn't say anything is nearing completion just yet, so no one's to get too excited, but this really is our main focus. And our pitch is very, very clear. We show the work that we've done to date. We present, obviously, the lessons that we've learned and how we've refined our methods. We've shown why we've got such confidence in our methods, why we've got such confidence in our team. And now what we want to show these potential partners is, of course, the number of targets that we have. And of course, the more targets that we have and the higher quality targets we have, the more investable Kavango is, even though we are still a greenfields exploration company. So while it might appear that things have gone quite quiet, I can assure you that we're working pretty much 6 or 7 days a week on this at the moment, while we're working both in terms of looking for new potential JV partners and in the discussions that we're having. Again, we'll be providing more updates on this in the near future with the progress that we've been making. Ultimately, what this all takes us towards is phase 3, and that's when we go drilling for mineralization. Now, I haven't mentioned the KCB so far because the exploration methods, as I mentioned a bit earlier on in the KCB, they're pretty tried and tested. So there's less of a need for proof of concept. But the work that Brett's been doing, our COO, who joined us in February, his main task, his main job has been to focus on driving forward the exploration program in the KCB so we can move straight to drilling. And the next round of drilling that we do across all of our projects, we will be on the hunt for mineralization. So proof of concept is now behind us. Target acquisition is ongoing. The next time we take the different rigs into the field, we'll be looking to make metal discoveries. So here's just a very quick update on progress to date. Obviously, I've talked about quite a lot of this, and I'm conscious that time is running out, so I'll leave this slide up. But really, the main message here is that there is a lot going on with Kavango. There's a lot that we'll be reporting on in the very near future. And in terms of the next steps, our focus is all about going out to drill as many meters as we can. We're looking at creative ways of financing the company as well. And we're doing everything we can to position ourselves so that when the current market conditions, which have been pretty brutal, we're going to look to position ourselves to be at the head of the pack once the tide starts to rise. And we want to be one of the leaders coming out of this quite difficult period. So Mark, should we go to questions?
Yes, we can definitely go to questions. I can see that a few have come in. Before we go to them, though, I just want to very quickly pick up on something you said about the strategy there. What is the purpose of it? Have you almost gone back to the drawing board? Because we've spoken before and you've done exploration, etc., and you've been doing drilling. This almost seems to me like you're redefining how you're going forward, and I just wondered what sparked that. And am I right in understanding that this is almost a back to the drawing board? Let's tackle this in a real strategic way going forward.
Yeah, not really, Mark, to be honest. I think this is part of the problem with our communications, and this is where there's some confusion. Last year, I thought we'd explained the proof of concept campaign clearly, but it's now clear to me that we should have maybe done a bit more about that to sort of explain exactly what the plan was. This challenge of the Kalahari Sands is a big one, and I'm not sure that we've explained that enough, that the geophysical models we've had, particularly at Dittow and the KSZ, and to a lesser extent up in the KCB, they've meant that, we've been having to, make quite a few there's been a lot of guesswork and a lot of assumptions built into our work. So it's not a case of going back to the drawing board, because obviously we had to start somewhere. The point is about then sort of building on the progress that we've made and making better decisions before we go out and deploy much more extensive drill programs. So it's not a case of sort of going backwards. It's more about the steps that we've been taking forward. And I'm not sure that strategy that we've really articulated that clearly enough.
Okay, okay. Well, hopefully that's the case now. And you have mentioned before about comms, so yeah, let's. I look forward to talking to you again and getting those communications from you about the progress that's going on. So let me take some questions because that's what we're here for this evening. So the first one here, you keep saying KCB is the best chance asset, yet you've left it till last. Still confused by this strategy. Good question.
Yeah, well, I mean, look, this is exactly the point. So, Zafar, I'll put the question back to you. Do you want us to go and drill early and potentially fail, or would you rather that we go through the steps properly to maximize our chances of success? At the end of the day, the geology has been around for tens of millions of years. Now, if you imagine that when the amount of ground that we have, we're not in a position where we can just start going and sticking holes in willy-nilly all over our ground. I mean, that obviously that's a path to failure. We would burn through our funds before you know it. So we do have to box clever. We are quite a small company now, very similar to what we did in the KSZ. I think, Safar, maybe you even asked the same question about why we'd left the B1 conductor drill until last. Well, again, it's down to risk management. We want to leave our best targets until the end, because by that point we've learned all the lessons that we can to maximize our chances of success. So in the KSZ, that strategy did work because we learned a lot about the ground conditions, and the ground conditions were very difficult that we drilled. In the KCB, when we actually do come out to drill this project, it will be with a view to identifying mineralization, and it just takes time. We're running, an 8,000 sample soil campaign at the moment to really zone in on these targets. And when we do deploy the rig, it will be an RC rig. So at this stage, I know it's taken longer than we expected, and we certainly hoped. I'd like us to have started drilling sooner than we currently have. But I do believe it will be worth it in the end. And ultimately, we're here to make discoveries.
And I guess you can't answer my question when you're expecting to drill. The timeline question, always a hard one.
Well, no, I can talk about it. I mean, the thing is, I create a rod for my own back, but I'm hoping towards the end of Q3, Mark. That's my goal.
Okay, end of Q3. Okay. So we have another question. Hi, Ben and Mark. Many thanks for the interview. My question is, will a second rig be contracted for drilling the KCB? Also, will there be further drilling of the KSZ this year, or will it be late in 2023?
So yes, there will be a different rig and a second rig for the KCB because it's a different style of drilling. So at the KSZ and at Dittel, we've been drilling diamond core because we've been extracting cores to analyze. In the KCB, we're looking at much shallower targets. So we'll be doing reverse circulation drilling up there. Again, that enables us to get a lot more meters as well. So yes, there will be a second rig. In terms of more drilling in the KSZ, we'll be putting an announcement out in the very near future about sort of what our plans are there. But my hope is that we will, yes. So we've got some interesting stuff going on at the B conductor area.
Okay, excellent. Thank you very much. Any more questions? When can we expect the results back and released from the Dittel drill?
Impossible for me to predict at the moment. I mean, we've been burned a bit by this in the past. The problem that we've got down in Southern Africa is that there was a lot of disruption over Christmas, which was COVID related. We've obviously got the metals market, which is going absolutely crazy. And what all of this has meant that the lab space is very, very difficult. We've paid for expedited assay tests. I think we called them rush analyses in the RNS. So we're looking to get this done as quickly as possible. The samples are with the lab now, so we are in the queue, but we're now at their mercy. So we just simply have to sit back and wait. We've done all we can to get this done as quickly as possible.
Okay, thank you for that, Ben. So do we have any other questions? Have we managed to nip the short selling in CAV, or is this still ongoing?
Yeah, I think we have. It's a difficult one. I'm dealing with this behind the scenes. I've got an idea of exactly what's gone on. There are a few other indicators as to who might be behind this. I'm obviously not at all happy about it. My focus is very much on the day job, but from what I've seen recently, I haven't seen anything sort of too suspicious. The issue with the short, I'm not against shorting. Shorting is fine. What I'm against is undisclosed shorting. The rules are very clear. If you go short, you have to disclose it on the FCA's daily update. And I believe that a short did build up in our stock that wasn't disclosed. If I can prove that, I will pursue it relentlessly. The question, the difficulty, of course, is it's quite an obscure market, and these people do use pretty sort of complex, let's say, mechanisms. So I am obviously in a position now as CEO of the company. I've got access to different tools and evidence which I wouldn't have had were I outside the company. But this is not something I'm planning on letting go anytime soon. What's done is done. The evidence is there. However, right now, my focus really is on building the Kavango business. And at the moment, it does look like things have been under control, have become under control. But if there is any more of this, I will be looking to move quickly on it.
Okay, and as your history as an investor and an activist investor, I'm sure you will be pursuing that pretty.
It's
pretty
infuriating, Mark, the way that these people attack companies like this. It really is. So anyway, but on a more positive note, really got to focus on the day job right now.
Indeed. Okay. Another question's come in. The possible IOCG target in the KSZ is a deep target, much deeper than Olympic Dam. Will CAV JV before drilling this target?
It's a very good question. It's all going to depend on how things line up. If we find that we've got shallower targets that conform with the Norilsk model that line up with the IOCG, that will make it much easier for CAV to drill directly, because to all intents and purposes, we would have drilled a lot, towards the IOC target, passing through, hopefully some nickel copper sulfides if we're lucky. In terms of our wider plan, I've got on my board up here my JV plan. I've built this into the JV, so we would look to drill test the IOCG with four holes. They will be deeper, but at this stage, all options are on the table. But we believe our plan is something that we could do ourselves, so it would be possible. It would be very risky, we know that. It would be preferable, however, to have a JV or partners in place to help enable us to do that, just so that we manage our risk a bit better.
Okay, excellent. Thank you very much. So, any further questions from the audience today? Are there any updates on the current drill at I8?
It's ongoing, and we're taking the hole deeper than we expected. So not really much more I can say about it at this stage, because I don't know anymore. But as soon as we do know more, we'll publish an RNS.
Okay, excellent. Short and sweet answer. Thank you very much. Any more questions that are coming in? Why is the share price not reflecting the work being done by the company?
This question just makes my heart sink. I'll be honest. I smiled there. Look, if I had a magic wand to make the share price go up, I can tell you I wouldn't be sitting here as CEO of Kavango. We are hostage to market conditions. At the moment, I mean, if you can point to me of any shares that are performing well in this market, please DM me on Twitter, email me, whatever, because I'm an active investor myself. I do find this question frustrating, because we're doing everything that we can in the field. We're well financed. We're into next year, but market conditions are what they are. This is very much a market of feast and famine. And at the moment, it's a famine. We've seen what it's like in feast time. So what my job is to prepare us so that when the market turns and the conditions improve, we're in as strong position as we can to recover strongly. At the moment, there really isn't anything I can do about the conditions. I mean, we put news flow out and it's getting, pretty much zero response. It is frustrating, but it's just one of those periods. We've just got to hunker down, get through it. We raised that extra money. That was obviously as a bit of a defensive move, but it was also to enable us to see us clearly into next year. I do think there is a chance of recovery later on this year. That's obviously what we're all planning around. We're well financed. We've got the warrant bank. We've got a lot of news flow. We're making a lot of progress on the ground. And that at the moment just simply isn't reflected in the share price. Like I said at the very beginning, I believe the market's pricing us to fail. You can take your view on as to whether or not we will. I mean, if you look at the ground holding that we have, you look at the geological setting, you look at all the progress that we've made in the field, my money is on Kavango making a big discovery. And also, I should point out, Mark, that, I'm one of the larger shareholders as well. So, the number of shares I've bought, I've actually bought this stock, which is reflected in the number of warrants that I hold. This is as painful for me, if not more so, than probably a lot of the people who are crying about the share price at the moment. So what I would say is hold the line. That's what we need to do. Stop complaining. We just simply have to wait until conditions improve, and then we are going to take this business forward. We're not like a lot of our competitors that are out there who are simply direct to fee paying machines. You're going to see some horrifically discounted placings, I think, in the coming weeks and months as directors look to keep the lights on and pay their exorbitant fees. We acted quickly. We did our deal at the offer, which I thought was a very good deal, and that sees us through to next year. Most of that money is going into the ground. In terms of sort of my magic wand, unfortunately, it doesn't exist, but we're doing everything we can to position ourselves that when the tide turns, we'll be at the head of the pack.
Okay, strong words. Thank you, Ben. It's very true about the market conditions at the moment, but it sounds like you're set up for it. You're looking ahead. Okay, I think there's one more.
We feel confident. We're looking forward to it.
Good, particularly in these times as well, which we will be talking about towards the end of this session. So I think there's one more question that's coming on Twitter. On the risk front, how much is each one of these deep 4 drill holes going to cost?
Very good question. Based on what we've seen on the current or the drill rate that we paid in the KSZ campaign, somewhere in the region of about $300,000 to $400,000. Hang on, let me make sure I got my maths right on that. Yeah, exactly. Somewhere in the region of about $300,000 to $400,000 per hole. But it's also worth mentioning that that we paid a lot in equity as well. So the campaign, I've seen some commentary that it will be excessively expensive for us. It certainly would be a big risk. We know that, and we're not in a position like as of today where we could do it. But we do have plans to put ourselves in a position where we can drill 4 of these.
Okay, excellent. Well, thank you very much, Ben Turney. That does put us bang on past. I don't think there are any more questions unless one just magically pops up in a few seconds, but it doesn't look like that's going to happen. So I'm hoping you can stick around until the end, where we will talk about the market conditions and what how companies are prepared to get through these times and what's going on, get different opinions. So that'll be in about an hour's time. Next up, we have James Campbell, the CEO of Botswana Diamonds. But thank you very much, Ben Turney, the CEO of Kavango Resources. And we'll take a 2-minute break and see you soon.
Thanks for having me.
Welcome back to StockBox Premiere, where now we go live to South Africa as our next guest joins us, James Campbell, the Managing Director of Botswana Diamonds. Good evening, James. How are you?
Very well indeed, Mark. And how are you doing today on your the summer solstice, I think, in Europe, and the winter solstice for us?
Yes. Okay. You're one of these people that reminds us of when the days are starting to get shorter. Yes. So thank you very much for that. But yes, you are correct. It is today. So yeah, that's good. But thank you very much for joining us. I know I called you the CEO before. I apologise. You are the Managing Director of Botswana Diamonds. But thank you very much for joining us. We're going to be talking about Thorny River, the Thorny River Diamond Project in South Africa, with a focus on the jurisdiction, the completed and planned exploration, and how Thorny River fits into the Botswana Diamond strategy. So I think, first of all, it's probably a good idea to give a bit of an overview of Thorny River, the project area, and what the area has produced historically from a diamond perspective.
Thank you very much indeed, Mark. Maybe if I should start at the kind of country level. South Africa is a major producer of diamonds, in addition to Botswana, which we're going to be talking about later, and also Canada and Russia itself. And Botswana Diamonds is the only active listed diamond explorer in South Africa at the moment. So the focus of this particular discussion is on Thorny River. And why are we focused on Thorny River? Thorny River was home to the very famous Marsfontein mine, which had a payback of 3.5 days. Not 3.5 weeks or 3.5 years, but 3.5 days. It was the most extraordinary discovery of a small kimberlite blow that yielded vast quantities of diamonds at high prices, and in fact produced 1.8 million carats in 18 months and from just under 1 million tons of kimberlite. And because that work took place so quickly, very little other exploration was done in the region, with the exception of the discovery of the Klipspringer mine, which was an underground operation discovered by De Beers, and I was the leader of the team at that time in the late 80s, and that was later developed by a joint venture by Southern Era and De Beers, and that later folded into Moana Africa, and then we all know what's happened to Moana Africa and henceforth. So you've got a major kimberlite province with Klipspringer mine on the west, Marsfontein at its center, and at its easterly section, Thorny River. And what we're looking at there is we're looking at kimberlite, high-grade kimberlite dikes with blows sitting on them. And what a blow is, it's essentially a small, extinct kimberlite pipe which sits on those dikes itself. Marsfontein was only 40 meters across on a 1 meter kimberlite dike. The Sugarbird blow, which basically paid for the whole of the infrastructure of Klipspringer mine, was round about the same size. So we're looking for these kind of needle in the haystack, but which has the potential to give fast payback to our shareholders.
Yeah, I've always liked that statistic, that 3.5 days payback for Marsfontein there. That's fantastic. Wouldn't that be great if you could replicate that at Thorny River? I guess that's the dream, at least.
No, absolutely, Mark. And one of the reasons why we're focused on it is not only my history in terms of being the discoverer of Klipspringer and being very involved in Marsfontein, but you'll see in the literature that very little has been written on this region. And the reason being is that work happened so quickly and the kimberlites were mined out so fast that people just kind of moved on. And post 2009, when the number of diamond explorers in the region hugely diminished. Now we're the last man standing, and because of my historical relationship with the area and my knowledge, it requires a very detailed, painstaking approach to exploration, which we've been doing over the past 5 years.
Okay. Well, can you bring us up to date then with the exploration carried out by the company and what the plans are, what you've learned and what the plans are?
No, absolutely, Mark. Where we started was from heavy mineral sampling. And why we do that is we look to recover kimberlitic indicators, spinel, garnet, chrome dioxide, and diamond. Following that, we've done several kilometers of ground geophysical work, electromagnetics, magnetics, and gravity. And following that, we were able to do a lot of percussion drilling and core drilling. And in fact, we had an over 70% success rate on our drilling in terms of kimberlite discovery. So we discovered something like 8.5 kilometers of kimberlite dike. And following that, our focus was not just on the discovery of kimberlite dikes, which, by the way, are the basis of the Klipspringer mine, but more specifically, these blows on these dikes. And this is actually where we looked at using gravity. And then we followed up that drilling using microdiamond sampling, which is an indicator for generating macro grades. And we've done macro diamond sampling. And then we've wrapped all that up into a competent persons report covering the Thorny River itself. And where we are now is we've created a mine plan where we have looked at the mining schedules, the processing schedules, and those kind of things with a view to applying for a mining permit towards the end of this year. But before we do that, we did a very thorough data analysis during the COVID pandemic, and we discovered there's several anomalies from historical data which had not been followed up. So that has already been followed up using ground geophysics, and we have a drilling campaign plan very shortly to follow those up to see how they would supplement or influence the mine plan.
Okay, and did you say you've been working for approximately 5 years on this project at the moment?
That's correct, Mark. Now, that's 5 years, but it's not consistent 5 years. If one was working for a corporate with an unlimited budget, this would probably amount to 6 to 7 months of field work in itself. Now, we obviously, as a junior, have to be very, very mindful of managing work programs, progress on those work programs, raising finances, shareholder dilution, and all of those things together. So this year, for example, what we will have done is we did the ground geophysical work, which I mentioned a moment ago. We've also done the mine planning work before that, earlier in the year. And the other two activities which we planned for this year are the percussion drilling program, which we're planning to do next month, and then a final mine planning program. But we have to look at that in the environment of running a public company with minimal funds, very mindful of shareholder dilution, and also mindful that we have a lot of activities in the Kalahari in Botswana too as well.
Okay, well, of course, you do have quite a number of projects across the portfolio there. So just thinking on the bigger picture, where does Thorny River fit, do you think, in the company's overall strategy? Would you say it's a flagship project or not necessarily?
Mark, it's a very good question. Botswana Diamonds essentially consists of two legs. We've got Thorny River, which we do consider to be our flagship project because we're migrating towards owning 74% of that project once the various regulatory approvals have taken place. We've been doing all the drilling ourselves. We're managing it ourselves. There is very thin cover, and it's relative to the Kalahari much quicker to commercialize. And then in Botswana, which is after all the homeland of Botswana Diamonds, we're called Botswana Diamonds. We're very focused on the Kalahari, and we see the Kalahari as being the last frontier for diamond exploration in Botswana, because you've got the Orapa province up here, you've got the Droneng province up here, and you've got this great big piece of Kalahari with thick Kalahari sand, as the CEO from Kavango Resources mentioned earlier. There are several discoveries in the Kalahari. There is obviously the Gagu diamond mine, which we're still looking to acquire from Gem Diamonds. There is the KX36 deposit, which has a pre-feasibility study on it, very close to Gagu, which we acquired from Petra Diamonds 2 years ago. And then we have other exploration assets which are further down the pipeline, such as Sunland Minerals and Maibwe. And if one puts a crystal ball in Botswana of, let's say, 10 to 20 years' time, I would imagine that there would be at least 2 or 3 mines sitting in the Kalahari to complement Orapa and Droneng, which will be moving towards the back end of their life at that particular point in time.
Okay. Well, just thinking specifically on Thorny River then, what are the plans for Thorny River going forward? Presumably you have exploration plans to get to a certain point by a certain time. So could you just maybe shed some light on what the work program's looking like for Thorny River? Maybe some key milestones investors can look out for, perhaps say value inflection points perhaps.
Absolutely, Mark. Well, one of the things that we did during the COVID pandemic was to have a thorough look at historical data. It's a really important thing to do because people often make decisions based on different constraints at a particular time. And following that, we identified 5 new targets. We've done the geophysics on them, and they were all positive targets, indicative of fresh kimberlite discoveries. We have a drilling program planned for next month to actually have a look at that. So that'll be one of the first pieces of news. We'll obviously report on the results of that drilling program, and depending on those results, we'll then amend or change the mine plan that we've put together, which focuses at this stage on the river blow and river extension blow, 2 new discoveries which Botswana Diamonds made. So with a view to applying for a mining permit or an equivalent towards the end of the year.
Okay, excellent. Well, thank you very much. I think that gives a bit of a clear picture of what's going on with Thorny River. We are now at about the time to open the floor to investors' questions, and I can see a couple have come in. I can see one here from Brand and Novus Communications. James, RE the South Africa empowerment stake, does that entitle BOD to grants or exploration R&D subsidies of any kind from the South African government?
It's a very good question, but sadly not. Is the straight answer to that one. What we've had up until the buyout of the minorities is all shareholders contributing, including our Black Economic Empowerment partner, which I would like to really call a fellow shareholder. So one of the reasons why we're cleaning up the structure is to make it more focused actually for commercialization. And we still have the same Black Economic Empowerment partner, which will hopefully take us all the way through to mining. But I would like to answer the question in a slightly different way, if I may, Mark. I was very privileged to have a meeting with the president of Botswana, His Excellency President Masisi, in the margins of the Cape Town mining indaba. And I asked him, what are the government of Botswana looking to do in terms of helping to support exploration, in addition to all the very good regulatory things they're doing? And the president said that he is looking to create an innovation fund, and he sees exploration as being part of innovation, which of course I agree, because it's the same thing. So we hope in Botswana there would be some kind of room for what Brand and Novus Communications have asked for, but I don't think in South Africa, sadly.
Okay. Well, thank you for answering that question. I can see a question has come in from Twitter. What are the priorities in Botswana given the multiple prospective exploration opportunities?
Mark, and the question there, very clearly, we're focused from a fieldwork perspective on Thorny River at the moment. But on a corporate perspective, we're still very focused on, trying to conclude the funding around Gagu. And also, very importantly, wrapping up the whole Maibwe joint venture, which came about as a result of BCL, which is sadly in liquidation. So those are our three main kind of activities at the moment. And as I mentioned earlier, Mark, in our questions, although we've been active on Thorny River for 5 years or thereabouts, we have campaign work done there. We're not busy there all the time. So we can have a look at our opportunities we have available to us and focus on those which can give our shareholders the greatest value and very importantly, the fastest route to commercialization.
Okay, excellent. Thank you very much. I can see another question has come in. It's regarding the remuneration. How does the current board remuneration compare with peers? So that's your salary, James.
Look, Mark, I don't mind. All of this is public knowledge. So someone just has to kind of read the annual report on that. I'm currently on £75,000 per annum. I am the sole permanent employee of Botswana Diamonds. So using that British euphemism, I'm chief cook and bottle washer. So I will work with my board to raise the money. I will go and seek 3 drilling quotes. I will go and supervise the drilling, and I will go and write up the press releases and reports once that's been concluded. But during COVID times as well, I voluntarily took a reduction to £50,000 per annum too as well.
Okay. Excellent. Well, that answers that question. And just thinking on the cash front as well, there's another question I have. But what is the cash runway looking like at the moment? And does the company have enough funds to cover the planned exploration?
Mark, it's a very good question. It's one of those kind of extraordinarily difficult balances a junior company managing director must have. And if I give you one small example, the year before last, at the depth of the COVID pandemic, our cash burn was something like £364,000 for the whole year. And that was my salary. It was all of our overheads. It was corporate action, and it was work. And what we managed to do in that year is we managed to do the deal with Petra Diamonds on KX36 in Sakaka. We managed to do the deal with Burgundy Diamond Mining of Australia and Dimextrat on farming out our exploration assets. And we managed to do a considerable amount of field work on Thorny River at the same time. So we have a base load, like many other juniors, of paying for our nomad listing fees, auditors, and things like that, which we obviously try and keep to a minimum. Then there's myself, and then the balance is flexed in terms of the amount of field work we do and the amount of field work the board feels warrants continuing with, in terms of balancing shareholder dilution with future growth of the company and near-term commercialization.
Okay, excellent. Thank you very much. There's a question I can see that's come in regarding synthetic diamonds. Are you concerned about the growth of the synthetic diamond market?
Actually, no, I'm not. And that might seem like a trite response, and it isn't a trite response. One of the things that I looked at when I was at De Beers, and I was at De Beers for over 21 years, and I was one of the team which put together what we call the Templeton Seminars, which is the meeting of the mining and the marketing arms of De Beers. Is we had a very good look at the sapphire, the ruby, the pearl industries, which have all gone down the synthetic natural route many, many years before us. And synthetics appeal to one market, naturals appeal to another market. If you look at pearls, you've got Mickey Motos at the top end, which are branded, expensive, beautiful pearls. You have cultured pearls sitting in the middle, which of course are still natural, but they are grown rather than dived for in a natural environment. And then you have synthetics. And the statement I often like to give to people is diamonds are in itself actually worth very, very little, but not really. Diamonds are basically representing the ultimate human emotion, which is love. And would you really start a long-term relationship, a marriage, which is hopefully based on love, with something which is synthetic? And I don't think you would. I think you would start it with a natural diamond. But saying that, your kids, when they get to be maybe teens, they won't be able to afford maybe a natural diamond, but they'll be able to afford a synthetic diamond, and they'll eventually grade upwards to a natural diamond, because after all, a natural diamond was born in the bowels of the earth, is billions of years old, and is unique. Whereas synthetic diamonds are made in industrial press. They are very beautiful, don't get me wrong, but they're not unique. They're commoditized.
So just on the synthetics, then they're made in a lab. They're made by compressing carbon, simple as.
Yes, they are. You basically, you're taking carbon and you're putting it under very high pressure, very high temperature, consuming a large amount of electricity to produce a diamond. And after all, if you look at a natural diamond, it's basically carbon, which was in the upper mantle under a great deal of high pressure and high temperature, and then kimberlites are basically the mechanism by which those diamond eclogites, which they're called, or xenoliths, which is a Greek for foreign particle, are entrained in a kimberlite and actually brought up to the surface.
Okay. And these would be used in industry, would they? Is that right? And the natural ones would be for, as you say, for people in love.
Yes, well, definitely naturals for people in love, undoubtedly. Synthetics, yes, very much so in drill core and cutting instruments and things like that. But there is a market as well in synthetic diamonds in jewelry. So when you go to a jewelry store, you can go and buy a synthetic diamond if you wish. The price point is probably, I think, about 20 to 25% lower at this stage than a natural diamond for an equivalent product. And what we're seeing is there is an increasing divergence between the price point of a natural and a price point of synthetic. And that exactly replicates what we've seen in the ruby, sapphire, pearl, and other kind of luxury goods industries.
Okay, excellent. And just thinking briefly on the sort of the value proposition of Botswana diamonds, probably focusing, let's say, on Thorny River, with hopefully repeating that 3.5 days payback. What's the diamond market looking like, do you think, going forward? And what if you could make an investment case purely for Thorny River? How would you go about doing that?
Mark, I'm going to touch on your diamond market thing first, and then I'll jump into Thorny River, because we haven't covered that. One of the things that's kind of come about post the 2009 global financial crisis, particularly on the London AIM market, is there's been a drastic reduction in the number of diamond explorers. So the amount of money going into diamond exploration has hugely diminished. I've mentioned we're the only junior listed diamond explorer in South Africa. We're one of only 3 in Botswana, and the other 2 are chiefly defunct. We not defunct, they're in doing other things at the moment, not much in terms of diamond exploration. In Zimbabwe, we would like to get involved, but we don't know of any other juniors that are getting involved. And if one looks at that, as well as the context of the larger mines, which are getting older, more expensive to run, and gradually reducing in production on the one hand, supply side. Then you look on the demand side. We've spoken about the value proposition of natural diamonds. What that basically means is a divergent supply-demand curve. And in economics, that doesn't happen. So what will happen is there'll be real diamond price growth for natural diamonds. So we believe the diamond business is a good business to be in for that very, very reason. And why we believe Thorny River is a good project to be in, because it's the closest project to commercialization. It's close to infrastructure, close to water, close to power, close to a population center. And the kimberlites are basically near surface. So you don't have a large amount of overburden to actually clear. And that's why we're focusing on Thorny River from our own fieldwork perspective right now.
Okay, and at some point, will you be able to put a value on the project based upon drill results? I'm talking about feasibility studies, that kind of thing, so people can get an idea of the potential.
Mark, it's actually a very, very good question. It's something that we've actually been toying with for some time. We can go down the traditional route. I mentioned earlier, we've done a competent persons report. One can follow that route of upgrading that to an inferred resource, upgrading that to an indicated resource, and then doing pre-feasibility study, feasibility studies, etc. But what we would contemplate as well is maybe fast tracking actually all of that, either to do our own development work or possibly even to consider a royalty miner where Botswana Diamonds doesn't put any of the capital in. But equally, it gets only a share of the diamond revenue going forward. So although for a large deposit, like for Gagu, for example, we would definitely look at redoing the feasibility study on it, because it's a very large amount of capital in a complex region with quite thick sand, with water and with all of those kind of things. Whereas in Thorny River, those kind of risks are significantly diminished. So there are other ways of achieving a commercialization target rather than going through the standard industry approach, which we would do on larger projects.
Okay. And the market can expect to see some of these developments going through the end of this year into next year, would you say?
Well, look, we'll be drilling next month, so there'll be an update on the drilling results towards the end of the month. There would be an update on the mine plan a month or 2 after that, and then there'll be an update on where we intend to go a month or so actually after that too as well. So we've got quite a clear kind of roadmap for Thorny River during the course of this year.
Okay, that's good to hear. Okay, I think there's one final question to come in. Is the diamond market very much controlled by a few big players?
That's a bit of a myth. And certainly when I started at De Beers was probably controlling 60% plus of the diamond market itself. But nowadays you have De Beers and Alrosa. One is the largest producer in terms of value, and the other is the largest producer in terms of carat. Carats controlling probably 50 to 60% of the diamond market. It's difficult to say at the moment with the war in Ukraine. And then you've got the balance. And so the diamond market isn't really controlled. It's a free market. You've got multiple players in it. So it's a far cry from what it was in the 1990s and 1980s and before that.
Okay, excellent. Well, thank you very much, James Campbell, the MD of Botswana Diamonds, for your time this evening, giving us a bit of an insight into what's going on at your Thorny River project in South Africa. I look forward to speaking to you on other interviews. As you say, with the roadmap, I'm sure we'll be catching up on as and when those objectives and milestones are hit. But for now, I'll speak to you probably in about 30 minutes' time for the roundtable discussion. But for now, thank you very much. Our next guest is Lester Kemp, the COO of Technology Minerals, and we'll take a 2-minute break. Thank you very much, James, for your time, and we'll be back shortly.
Thank you, Mark. Lovely having you.
Hello and welcome back to StockBox Premiere, where now we are live in Devon as we welcome our next guest, the Chief Operating Officer of Technology Minerals, Lester Kemp. So good evening, Lester. Thank you for joining us. How are you?
I'm very well, thank you. All fine down here.
Yes, all fine down here. Are you... go on.
Sorry, I'd just like to say a quick hello to James Campbell, my old friend. It's good to see him. I haven't seen him for a long time, so it's very good to watch him and see the progress that he was making with Botswana Diamonds. And I'd just like to congratulate him for all the work he's done so far. Brilliant.
Excellent. Okay, good. Well, I can see you do look like you're in a nice part of the world down there. There's some nice rolling hills behind you. Of course, we're going to be talking about your Asturmet project in northwest Spain, taking a look at the scale of opportunity at Asturmet, the high-grade mineralization and the target commodities. So the first question I'd like to put to you, Lester, is can you introduce the Asturmet project and the scale of opportunity that the project offers?
Yes, I mean, as the slideshow will show, it's a very large project. Do I just do the share screen or do I?
Yes, you can do a share screen or the slides. They're there now.
Okay. Yes, so I'm the CEO of Technology Minerals, just talking about the Asturmet nickel copper cobalt project in the Asturias region of northern Spain. And just to give you some sort of idea, the licenses that you can see on the left-hand side represent 3 licenses. We've got another 4 here to the east, and we're also applying currently for another license in this area over here. But the only license that has been granted so far is what we call the St. Patrick license, which is this one here, and it contains the old historic Asturmet mine, which I'll discuss right now. So we hold the Asturmet project through our wholly owned subsidiary LRH Resources. As I said, it consists of 7 exploration permits. Only one has been granted so far, which is the St. Patrick license. And it covers about 61 square kilometers. But once we have the other licenses granted, we should have a total area of about 461 square kilometers. And we've really got a first mover advantage in this region, which has a known history of old copper, nickel, cobalt producing mines. So it hasn't been operated since 1953, and it's remained dormant for the last 69 years due to weak copper prices. But there are quite a number of mineralized areas, and that's the subject of all our exploration so far. So just a close-up map. These are the licenses as you saw on the previous slide, and this is the St. Patrick license, which holds the Aramo mine. And the team on the right-hand side, we have Santiago on the left. He's our local Spanish consultant geologist. There's myself. And then we also use the team from Aurum Exploration. So we have Vaughan Williams here and also Stephen. And this is quite an important picture because it shows the location right at the top of what we call the Gamonteiro Station Peak, which is right at the height. It's the highest point within our license area in St. Patrick. And it gives you an idea of the scale of the depth of mineralization that we potentially have. I mean, that's at 1,791 meters, and Aramo sits at 1,200. So we have noticed mineralization around this peak, this station peak. So we have a very large interval of potential mineralization for us to test with our exploration work. And this is what we call the plateau. It sits on top in the middle of the license area, and very easy country to walk around. With satellite imagery, we can pick up alteration. And so we've sent all of our field geologists to those locations to validate that and also see if they've found any mineralization. We also find that there are some historic adits in the plateau area. You can see this one on the left. And then these are the spoil heaps that come out from that operation, which, is, as I said, is an old historic little mine. Then we move on to the main asset within the St. Patrick license, which is the Aramo mine. And you can see here, these are the old mine buildings. And up here is the processing plant, or the old processing plant. This is an aerial view using a drone of the old processing area. And it's just worth bearing in mind on the next slides, just to sort of take reference with this particular chimney here. And it just helps you see where you are. So on the previous slide, we had the old mining buildings here. And then here we have Alex Stanbury, our CEO, standing in front of those buildings. And the Aramo mine, we have to climb up the hill along the side here. And the highest level is what we call level 4, which is up around there. But it's a great place to work. It's not very populated. There is a small village nearby. But they're all very pro-mining, as is the ministry in Oviedo in the Asturias region. We've had a lot of support from them. They're very encouraged by the work we've done so far. So this is just having walked up the hill, or halfway up the hill. This is just looking down to the old mining buildings and the processing plant. And interestingly enough, there's a viewing point, a tourist viewing point that's been built here. So you can walk along. You get a lot of walkers coming along, and there are great views. Once you get up to the top of the hill, we hit the Bronze Age workings, which are really spectacular in scale. I don't think this photo really does justice. I mean, this is a really massive excavation that they've done. They've picked out all the high-grade mineralization. They're obviously after the copper. Cobalt at that stage didn't really play an important part in their commodity search. But, I mean, they've taken out huge high-grade lodes from here. And then this is just an example of, as you move towards the historic workings between level 4 and level 3, you can see further Bronze Age workings, which are quite dramatic. And then once you go underground, level 3, we get some mineralization. This is high-grade copper vein, probably running about 10%, maybe even 15% copper. And then here's an example of some more copper mineralization. We get a bit of malachite, azurite. We also get a bit of erythrite, which is the cobalt mineralization. And again, it's easy access getting underground. The adits are very well maintained. We've had a safety audit by the Spanish mine safety team, and they are coming in to do further survey work for us, and also identify if there are any areas that are slightly dangerous that we should rectify. But the report we've been given so far has been very positive. So that's why we managed to go down and access all these old workings, which provide a huge amount of information. And again, you can see there's a little railway line here. This is within the level 3 workings. And again, you can see copper mineralization here. That's probably grading about between 5 and 10%. So there's some spectacular specimens that we collect. And like I say, access is very, very good. Just really finishing up towards the end of this presentation on the project. This was an exploration update that we put out in March this year. It relates to a field trip that took place in November last year. 79 samples were collected on the license, 53 of which were taken underground, and also on level 3, and also some samples were taken on the old historic stopes. And you can see we're getting very good grades. Cobalt, 0.4 here, 0.5 there, 0.39, 1.88 here. And of course, as you'd expect, good copper grades as well. 28% there, 20% there, 5 here, 2% there, 17, 16, 13, and then associated nickel as well. So what are our plans moving forward? After this summer, we've got the mine safety team going underground. They are going to be running a LiDAR survey. So they'll go along with this survey, and it will produce essentially a 3D model of the underground workings, to which we'll be able to tie all the data such as grades, alteration, structure, all those sort of things, so that we can actually start building up a 3D model of the mineralization at the Aramo mine. And that'll be especially useful to be able to guide the drilling that we have planned. We're planning on doing some underground drilling straight into the mineralization, and also doing some drilling on the plateau, where there's a number of alteration zones that we've identified so far, and that we want to test further with some drilling. And then we'll also continue with some regional and underground sampling and mapping. So that really forms the program between now and the end of the year. We do expect between now and the end of the year, our other licenses to be granted. And as I said, we have one last license which has recently been applied for. I think it was done last week, and we hope that will come in this year. Alternatively, it'll come in next year. But that is just a quick brief view of the Asturmet epithermal nickel copper cobalt project in northern Spain.
Okay, thank you very much. That kind of gives a fairly good picture of what that project is all about. So you said it was in production about 63 years ago or something like that, was it? But
that's right, yes.
Yeah, and it was left because of the low copper prices. Even throughout all of that period, it just wasn't economic.
Correct, yes.
Okay. Do you know what you picked it up for?
How do you mean in terms of price?
Yeah, exactly. In terms of price, yeah.
Yeah, if you look through our prospectus and also in our news releases, you'll see that we did a deal. We acquired it for predominantly shares and some cash.
Okay.
But I think it was very good value. We see it as a major asset, probably our primary asset in our portfolio, and it has attracted quite a lot of attention from a number of majors. We've had 2 site visits done so far, and we're in comms with those 2 majors. And actually, we've just presented at the PDAC. We had some people pop by the Aurum exploration stall, and we had majors coming along, and they were very interested in the work that was being done and also the grades.
Okay. So would you say that perhaps there are bargains available even today? I believe there are still bargains available. Would you say you got a pretty good deal here?
I think we've got a very, very good deal. The size and the scale of the mineralization that we expect to find there through the drilling, I think, is going to be substantial. With the historic workings, they obviously went after the high grade, the visible high grade. There was limited drilling done, but not that much. It was more or less a case of follow the mineralization and mine it that way. So we see a huge amount of uplift in value on this with the results that will come through from the drilling later this year.
Okay, well, let's talk about that then, the exploration that's been done, because I understand that recent exploration identified high-grade mineralization at the Alamo mine. Are you able to expand on the recent exploration results and what the next stage is for exploration of these targets?
Yeah, so it's a 2-phase program. We have, like I say, the St. Patrick's license is 61 square kilometers, so it's a large area to cover. You see what the terrain is like. It is a steep climb up the hill, but once you get to the plateau, it's fairly easy to walk around. The alteration is visible, which really does help. So we have a team going around systematically mapping the alteration and also collecting samples when they spot mineralization. So that's what we've started off. We've started at the southern end of the license, and we're progressively moving northwards with that. And it will take a while to do. And then at the same time, we are going underground at level 4, level 3, and we're hoping to get into level 2 as well. And we will systematically map that and also take further samples. But I think the important thing will be the underground LiDAR survey that the mine safety team will do for us, which will allow us to attach all the data like alteration, grades, structure, etc., in a point cloud setting, which will really help generate a model for the Alamo mine and give us a better understanding of the mineralization there.
Okay. So the market can look out for that visualization, the sort of 3D models. I know Kavango Resources are quite good at producing 3D models, and they are extremely useful, really, for investors to get an idea of what's going on. And the CEO or the geo in the company can kind of explain and shed a bit more light on what is there. So
yeah, exactly.
Yeah,
exactly. And also the underground LiDAR helps as well with the drilling, because if you're going to be doing drilling on the plateau and you're potentially drilling through old historic stopes, you want to make sure you know where those stopes are so that you can guide the drilling, and then you don't encounter any problems with a drill rod going through a large cavity or anything.
Sure.
So yeah, it'll help extremely.
Okay. Now I understand as well that you had a competent person report for the project, and you've mentioned about the historical mining that took place for copper, cobalt, and nickel. Are you able to expand any more on the historic mining activities and the associated reserves with this project?
Well, as far as we've looked into all of that through the historic records, but the records aren't very complete and they're quite scarce. But Santiago, our local geologist, has a good network of contacts within the ministry and also within the sort of geologists in the area, and he's gradually gleaned more and more data. But we have found some records that at least 200,000 tons was taken out at grades of between 1% and 20% copper, 1% to 3% nickel, and 1% to 3% cobalt. So that gives you a rough idea of the potential grades that could come out with further drilling that we plan later this year.
Okay, excellent. Right, well, we're on time for the Q&A from anyone who is watching. So I think there are a couple of questions I can see that have come in. Your China-based investor acquired a 10% stake in the US Blackbird Cobalt project. Do you see a similar development with Asturmet?
We don't have a China investor. We have a lady who is based out of the US. She's not Chinese. And yes, she did acquire 10% of the project at Blackwall. It was actually the Blackbird license and also our Imperium license, which are the two licenses that we hold within the Idaho Cobalt Belt. And collectively, those two licenses form the largest contiguous license within the belt itself. And we're immediately southeast of Jervois Mining, who are starting up their cobalt mine there this year.
Okay, excellent. Okay. Are there any, what's this question? Lester, what is the cash runway looking like for the moment? And does the company have enough funds to cover the planned exploration at St. Patrick's license?
Yes, we have no problem covering that. As you know, we have a battery recycling business as well. We own 49% of Recyclers. There'll be income coming in from that to the company to pay back a loan facility. So we will have cash coming in. But we also have cash reserves ourselves. The spend on St. Patrick license to the end of the year is probably around 300,000 euros. And, you know, we're quite comfortable that we have that available to carry out our exploration plans. But I should also say, just remind you that we have had interest from some majors, and we are being contacted by others. And our sort of plan really is a project generator model. We don't want to acquire more and more licenses all over the place. We want to acquire quality licenses, add value, and then monetize them by hopefully bringing in a joint venture partner, a large joint venture partner who can take it up to feasibility and also to the mining stage. But our model really is a project generator and to monetize those values for shareholders.
Okay. Is that what the business model is based on? You said there about you have been contacted by majors, so you've got the cash flow from the recycling side of the business, and then from the exploration side, you're looking to JV them or presumably explore them and move them on. Is that right? Is that the business model?
Yeah, I mean we've got cash in the bank to carry out all the exploration work that we need to do at Aramo. But we will have income coming in this year from the battery recycling business, the payback of the loan. So we're fine on that front. But you know, we don't want to put anything into production. That's not us. We're explorationists at the end of the day. And you know, to take something into production is highly dilutive to shareholders. It's not our thing, and we'd rather bring in attract a big partner, a big company to come in and do that for us.
I see. Okay, it's not often that you hear a junior explorer say that they don't actually want to get to production. But I think it's good to be honest, because the truth is that it is very difficult to get to that point. And as you say, it is diluted the shareholders. So
yeah, I mean the market sees, unfortunately, exploration two ways. It sees it as either being positive because you picked up ground, but also the downside is they see it as draining money, and also they don't really see cash flow coming in for a long period until those exploration assets develop, hopefully, into mines. So it's a long period between the exploration and actually getting cash flow coming in, and we're realistic about that. But we have a very good team. We also have the technical team from Aurum, and together we are very carefully selecting projects that are in the battery metal space, and we will acquire those. We'll add value with a small amount of expenditure, and then we will look to farm them out to the majors.
Okay. Well, I see a question has come in here. Any updates on whether production has started at the two recycling plants?
I think for that you'll have to ask our chairman, Robin Brundle. And as soon as there is any production, that will be announced in a press release. So just keep an eye on the press releases coming out on our website.
Okay. Another question I had from earlier, how critical is the recyclist group activities to the TM1 strategy, and how profitable can this element of the business be?
Again, I refer you to Robin Brundle. He's the chairman. We only have a 49% interest in recyclists, but I think you have to look at it from a circular economy point of view. We need to still mine assets to build iPads, etc., and also car batteries and so on. So we have to have a sort of exploration arm to the business, but at the same time, we take responsibility as well. We are miners. Miners don't necessarily, or explorationists, we don't really get a very good name in the press sometimes. And a few years back, Alex and I went to a battery conference in Birmingham, and we had a presentation by a group that was doing lead acid battery recycling. And we both thought it would be an excellent addition to the business, and it would kind of close the loop on the circular economy. So we explore for metals. Those metals will be mined. They'll go into batteries, etc. And then those batteries have an end of life, and we have to take sort of responsibility, in the mining sector for that. And how better than to have a recycling business where you can actually put those batteries through, recycle them, and have a product which you can sell back into the battery manufacturing industry.
Well, I just want to pick up on something to do with cobalt, because obviously that's used a lot in battery metals, and a lot of the supply, most of the supply, I think, comes from the DRC, which is, of course, not very well known for its good practice when it comes to child labour and work, etc. So I think to have a cobalt exploration project in Spain, in any kind of exploration project in Europe, I think is unusual. How do you feel that perhaps your project or projects within the European Union are going to fit into the big picture for the supply of battery metals in the future?
I think they're going to fit in extremely well. The Ukrainian crisis has caused governments to, there are governments out there who have established or are establishing electric car facilities, manufacturing facilities, and they will be looking to secure pipelines of products that go into those car manufacturing, especially the battery side. The UK is no exception. It's got British Volt, it's got Jaguar Land Rover producing electric cars. So European countries will be looking inwards and trying to identify their own resources that they can leverage and hopefully bring into production if the economics are right, to provide that secure, safe, politically correct, non-DRC type supply of product. So I think having a battery metal project in Europe, I think, is going to be critically important, and I think we'll see quite a few more popping up.
Indeed. Okay, well, I think the last question there has also just popped up. Are there any developments at the Leinster Lithium project or at the Cameroon Cobalt project?
Yes, at the Leinster Lithium project, we have another license where we have found float of spodumene. It's looking very, very good, and we are currently sampling that area at the moment, and those samples will go off to the lab. But the initial sort of indication suggests that it's going to be quite good grade lithium, but we'll only know when that comes back from the lab. And in terms of Cameroon, yes, we have licenses under application. We're just going through a due diligence process on those licenses. And once that's satisfied, then hopefully we'll be beginning exploring there.
Excellent. Okay, well, thank you very much, Lester, the COO of Technology Minerals. What I'd like to do now is bring our other directors back into the roundtable discussion. So, of course, Ben Turney and James Campbell. And we're going to have a bit of a roundtable discussion about what's going on in the markets at the moment, the commodities, and how to survive perhaps in these downturns. And the first discussion point I want to bring in is, what steps as directors are you taking to conserve cash and optimize business activities in these extremely tough conditions? And Ben, I want to come to you first, because you said at the start that you raised 750,000, but you actually scaled that back by 45%. And I wonder, was that a good move? Are you confident you can still raise money? Was it not better to take what you could have to give you that buffer?
Time will tell, Mark. Obviously, at this stage, we have to balance sort of the short-term concerns about what's happening in the market against shareholder dilution. The easy decision for us would have been to have taken the full amount of money. I think we would have got over £1.5 million. But one of the things about Kavango is that we've managed our business very well financially. So we've got a very tightly run ship. And by and large, our budgeting, we work on a 6-month budget, which we update every 6 months, an operational budget. We manage that and monitor that very closely every month. It's one of the things I introduced to the business, was a very tight control over our finances, thanks to my entrepreneurial background. I think now the budget that we put in place and the plan that we have in place, we know it takes us through to next year. I believe that will be enough time for us. But obviously time will tell. There is that saying in the market, while the ducks are quacking and all that, you should take the money while it's there. But I think and I hope that what we've done is right by shareholders and right by the business, and will prove to be a good decision.
Okay. And do you see any concerns in the market? Have you taken any actions to address those concerns?
Yeah, absolutely. We've obviously scaled back on a few operations and we've pushed back a few plans. So, for example, we had hoped to fly some more airborne surveys in the first half of this year over the KCB. We decided at the start of the year to push those plans back a bit. It would certainly help us in the KCB, but at the same time, it's something that can wait. So, yeah, we've taken steps early. We've seen the way the wind was blowing. I think a lot of companies, they can leave things a bit late, but we've taken the steps we needed to quite early. So I'm pretty confident about our position now. We've got an excellent working capital position and strong shareholder support.
Okay. Yes, you want to be looking ahead, unlike the Federal Reserve, who tend to do things with hindsight. But James, what's your opinion on perhaps what's going on? Are things feeling a bit leaner for you, and you taking any actions with regards to this?
Mark, we saw probably our leanest times at the very beginning of the pandemic. And the reason being for that is diamond pricing is quite a reactive element to black swan events. So if you look at the pandemic, if you look at the global financial crisis, you go all the way back to the 1930s. Rough diamond pricing falls very quick and very fast. So rough diamond pricing basically fell by 30 to 40% in the middle of the year before last. It's recovered significantly. So when we looked at that particular circumstance, we took the large salary cut, which we saw. We reduced our field work considerably. But whilst many others were looking to kind of offload their exploration assets at bargain prices because they didn't know how long this was continuing, we saw this as a great opportunity to do deals. And we did 3 deals. We did the acquisition of Petra's assets in Botswana. We did the farm out with Australian listed Burgundy and Dimextra Botswana. And we did the conditional acquisition of Gargu. So that was quite a depression. And then, as history repeats itself time and time again, the diamond price rebounded very, very fast at the end of last year and was probably up 10% plus on pre-pandemic pricing. And now, of course, we've got the Ukrainian situation. And what that means to us is sanctions are being applied to Russian diamonds at the moment. They're still filtering out through China and India onto world markets. But there is the thought that possibly 30% of world production would start to reduce. So it's had very little impact on diamond pricing right now. The acid test will be is how many diamonds are sold between Thanksgiving and Christmas in the States, because that's when 25% of world diamonds are sold. So we're looking at a slightly rebounding situation, but we're also very, very mindful of cash and what we're focusing on in terms of near-term production.
Okay. I guess it's slightly different with diamonds. It's not necessarily commodities that are used in infrastructure or the electric vehicle revolution, let's say. But yeah, you no doubt you'll find out then, as you say, during the Thanksgiving times. But you prepared? Do you think to take action if you need to? Because if things do get tight, you need to raise money. Perhaps there's not as much confidence with investors to actually take part in placings.
No, I think so, Mark. This is the fourth public diamond company I've run in the past 16, 17 years. And, I remember taking AK6, which is now the world famous Karowe mine, through the global financial crisis, where we actually managed to keep African diamonds going. And the short story behind that is we gave investors a 25 times return on their asset, but we tightened our belts considerably. We've got a great board with, chaired by Dr. John Teeling. It's the same board as we had with West Africa Diamonds, which Lester will remember well, and the same board as African Diamonds. So, we've seen these cycles, and, we'll just be very, very mindful of where the cycles are going and kind of tailor our work programs and our outputs commensurately.
Accordingly, okay, yeah, it does help if you've been through it before. Lester, have you been? Have you seen a few of these before? Are you familiar with?
Oh yes, yeah. James and I have seen plenty of these in the past. It just goes to show our age. But look, I mean, we're all public companies, so we have a responsibility to our shareholders to make sure that we use the money properly. We're quite lucky with Technology Minerals. Our assets in Idaho, they're on BLM land, so you pay an annual rental every August, and you don't have to do any work to keep them in good standing. As long as you pay the rental, that's it. But of course, you don't add any value. So it gives us the discretionary spending, depending on how much we have. We can spend money and add value. In terms of Spain, there is a minimum requirement that needs to be spent on the licenses to keep them in good standing. That's with the Spanish mining law, but those are manageable. And then in Ireland, on our lithium project, we have Global Battery Metals, which is a TSX listed company, who has an option and is spending the money. So we're quite lucky that we can be quite lean with the expenditure, but spend the money and add value when money is available. So we're quite flexible.
Okay, excellent. Okay, well, this brings me on to the next point, and maybe James and Lester, having been around the block, let's say, maybe perhaps a little bit longer than Ben, you've seen the cycles before, but this idea of a commodities super cycle, and we hear that phrase quite a bit in this space, and is a very exciting phrase. And I mean, personally, I feel that we are on the cusp of an awesome time in the mining commodity space, junior resources. I was talking to a resource investor just recently, and his analysis, he's analysed all the mines for his fund, all of them. He's modelled all of them, and he talks about the green shift. And if we're going to do this green shift as a world, we have to create the investment of 6 United States in the next really kind of 30 years, and then most of that's going to happen in the next 10. So where do you feel we are? Do you feel we're at the beginning of such a cycle that is driven not only by its cyclical nature and the timing, but boosted by this idea of a green shift? So Lester, let me come to you first. What's your opinion on that?
Yeah, I mean, I agree. I think we're right at the beginning of that. People have talked about it, the super cycle. I think we're just at the beginning. There's a change in attitude. People don't want to have diesel engines or gasoline, etc. The new generation, the Generation Z, they're very environmentally conscious, and they're the ones that really are going to be driving the whole electrification or energy transition to electric vehicles, electric planes, etc. And you will see that coming. The only problem is the shortage of raw materials like lithium, nickel, copper, cobalt, etc. And the supply keeping up with the demand. You've seen some of the car production facilities scaling back because they haven't got enough product. The battery manufacturers can't supply, just-in-time type delivery. So you're seeing scaling back. But the mindset is very much focused on the energy transition and electrification, and that will just continue to drive demand for, metals. So I think it's an especially exciting time. I think in 10, 15 years, we'll look back to this period now as the beginning of the super cycle, driven by electrification.
Okay. Ben, do you agree with that? You think we'll look back in 10 years and see this is the start? I think I recall you in an interview mentioning that you're not sure full capitulation has happened yet. Do you think maybe some more short-term disorder before we get there?
Sorry, I put myself on mute. I think the acid test is now, Mark. We've obviously seen quite a substantial pullback in prices recently. There's been a lot of skepticism among professional investors about the junior mining space. I've spent a lot of time over the last 12 months, obviously building up my network and talking with people to be able to back Kavango. And there's been a bit of a shift recently in terms of their interest. It's definitely picking up. But I think there's also been a lot of skepticism that although prices had spiked, there was a feeling that it was just a spike. Now that we're seeing this pullback across the board, the price action over the next few months, I think, is going to be key. If we see the metal prices bottom out at these sorts of levels, which are higher than previous highs, that's the key point to note. If we see them bottom out at this level and we see those prices start to rise again, which the inflationary outlook alone suggests that they will, let alone the pressure from the green revolution, I think we'll start to see a lot of money come into the space, because at that point people will believe, well, yep, hang on a minute, these metal prices, these high metal prices, they are here to stay. So we haven't quite got to that point yet, but we could be nearing it.
Could be nearing it. Okay. And James, what do you think? Having maybe seen a cycle or two in your time, do you think we're nearing it?
Diamonds are, Mark, in a slightly different space than this. Diamonds actually tend to be at the back end of the cycle. And typically, when companies such as De Beers were listed, you would find a very strong correlation between the De Beers share price and the Dow Jones index. And I think you'll find that's very similar in many other diamond producers. Although, if you look at where the Botswana Diamonds share price is at the moment, it almost has negative beta. When the markets go down, we go up. I can't say the opposite is true, sadly, as such. So diamonds are almost at the back end of things. And if I want to look to see where that would be going, is that there is still little money going into exploration around the world. However, the Australian market does seem to be funding a lot of exploration work within Australia and within Africa itself. If you look at Burgundy Diamond Mining, Lucapa Diamonds, and Newfield Resources, all of which are developing mines and all of which have raised much of their capital from Australia and the Far East, it does give a kind of a good sense that they understand the long-term supply-demand economics, which I talked about earlier. Now, I just want to pick up on one thing Lester mentioned about provenance too as well. That's becoming even more important in the diamond industry, that especially now with the war in Ukraine, is kind of expedited matters that consumers, Generation Z, as Lester said, really want to know where their diamond came from. They want to know that it came from a place which is has socially responsible policies, where you're using green energy, where people are paid a fair salary, and it follows an ethical and a value chain with a lot of integrity. And I think that will possibly narrow down the overall diamond base too as well, and make areas such as Botswana and South Africa prime destinations for diamond exploration and diamond mining.
Okay.
I should say also the diamond industry in Angola is beginning to take off. Ever since the new president coming in, he's been trying to cut corruption, and he's been doing an excellent job. And he's now encouraging investors into Angola to do diamond exploration and hopefully production as well. And the laws and everything and the way they're doing business is changing. So you're seeing going to see a bit of a rebound in supply coming from Angola. And it's been done properly now, because the new president there is really good. He's tackling corruption, which is the main thing.
If they've got any money left, Mark.
Exactly. If they've got any money left, that's a very important point. Ben, yeah, we'll talk about if you have any money left. So Ben, you sounded like you were kind of tightening a little bit, just being a little bit cautious. James, you said that you really focused during the pandemic on the projects that you had. Where do you all sit, do you think, with how to position the company in these times? Because there will be some bargains to pick up, but there's also the concern about conserving cash and staying out. So, as CEOs, are you maintaining the projects in your portfolio, or are you perhaps as well looking for distressed assets to pick up? Let's go to James first.
I think it's both of those, Mark. We're certainly focusing on the assets which we have at the moment, Thorny River and those in the Kalahari. But yes, we are very mindful that there are many older mines, many mines which have gone on to care and maintenance in the region for reasons not necessarily just commercial reason. And when we look at those consistently, and an example of that is the Gagu mine in central Botswana, which we believe with the right structure, with the right financing, and with the right technology, will be a sound diamond producer for at least 20 years for a life of mine. But it does need a fundamentally different approach to mining it. And we're up for that. And the challenge we have is to be able to persuade a fellow partner to come on board and share that journey with us. So yes, focus on our knitting, but also keep a strong ruler on those distressed assets. And very importantly, find out why they became distressed. Because often with corporates, it may not have been a commercial reason at the time. It may have been a political decision. It may have been a strategic decision. And of course, as we know in the mining food chain, we're all running juniors. You often start with a large corporate, you go to a mid-tier, you go to a junior, and then you possibly go to a private mine at the end of the day. And everybody manages to get their kind of pound of flesh along the line. So you've just got to be very mindful of history and very mindful of what technology and what new thinking can actually bring to older deposits.
Okay. And Ben, what do you think then? Are you seeing opportunities come across your desk? Are you considering them, or perhaps not?
So not so much for acquisition at this stage in terms of external projects, but where this presents for us a huge opportunity, we believe, is across our portfolio. So when our market cap was up at £20 million, more professional investors and sort of larger firms, they weren't so interested in Kavango at that point. They felt it was a bit too speculative. But now that our price has pulled back, we've seen there's a great deal more interest. And so I think it's going to open up some very interesting commercial opportunities for us, especially in the KSZ. So you've got to obviously look at least 6 months ahead in this game. That's roughly what the stock market does. So it's no good sort of thinking sort of where are we today? It's, well, where are we going to be at the end of the year? What's 2023 going to look like? And with the KSZ, we've got a project that I talked in my presentation about all of the work that we've done in terms of proof of concept. We're going through the target acquisition phase. The upside potential on this project is absolutely enormous. So we're taking this pullback in the market as an opportunity to market quite heavily to potential JV partners to come and join us, because we think we've got such an attractive offer. And when the market does turn, which metal prices suggest that it will, so at some point, exactly when is anyone's guess, but we believe we've got a compelling offer to take to other PLCs and other partners to come and join us on this journey. So we're looking to expand our business aggressively through partnering out. That's where we see the opportunity.
Okay, I see. You concerned that you won't get the best price?
Well, it's not about the price so much, Mark. It's about the ability to fund the project with the KSZ. I mean, at the moment, we've got a £10 million market cap, and if we make a discovery, a major nickel copper sulfide body, I mean, how many hundreds of millions is that worth? Again, I said in my presentation, we're being priced to fail as things stand today. But if you look at our ground, you look at our team, you look at the work we've done, the technology we have, our funding already in place, it's now all about bringing more money in to enable us to scale up the business. So that's what we're really focusing on. The potential is so great.
Okay, excellent. Lester, what do you think then of the company considering other projects? Of course, you do have the safety net, let's say, perhaps of the cash flow coming from the recycling side of the business, which perhaps puts you in a slightly stronger position than the companies that are purely reliant on the market. But what's your position on this, or what's the board's position at TM1?
Yeah, I mean, we're lucky in that respect, but we don't take it for granted. I think, we listed in November on the London Stock Exchange, and when I talked to the head of the London Stock Exchange, you have to look at different sources of funding. In the battery metal sector, because we've got that link with the recycling business, we're attracting attention from the car manufacturers and also the battery manufacturers. So that gives us a slight edge in terms of marketing. But I think one thing that's not covered here really is ESG. And if you read a publication by the London Stock Exchange on ESG guidelines, it talks about a huge pool of funds in specialist funds that will invest in the mining sector if the ESG is there in the business. And I do believe that, in less than 5 years' time, if you haven't got a strong ESG policy in the company, you will not get funding. It's as simple as that. So, yes, we've got potential income coming in from the battery recycling business, but we're not taking for granted. We have other avenues in terms of, you're seeing Tesla taking positions in mining companies and taking off takes, with Inco, etc. So, I think you have to kind of look outside of the box in terms of funding. Don't go the traditional routes. And it's all about marketing your company. So,
yeah,
absolutely.
ESG very important. I remember when I first started investing and people talked about ESG, it was like, oh, we're not interested in that. That's not exciting. But I think it's becoming more and more important as we go forward. Ben, what do you think? Is that something that's really important to Kavango?
Yeah, even for a business of our size, it's a key concern of ours. So we do a lot of work in country, both in terms of working with our staff, making sure they're properly trained, properly led, making sure that our exploration has minimal environmental impact, and also working and engaging with the local communities. It can sound like a bit of a cliche, and it's not really something that we market. I don't want us to market this work. I just want us to do it. It's obviously mentioned in the annual report, and we talk about sort of our ESG, but I completely agree. Your ESG credentials, particularly when a project grows and becomes successful, the funds increasingly, it's going to be a significant box to tick. And if you can't tick that box, I agree with what was just said. You may well struggle to raise significant capital. So it's very, very important. You have to get this set up properly from the beginning.
Okay. And James, similar story at Botswana Diamonds with regards to...
No, absolutely, Mark. I was asked last year to give a couple of presentations on ESG to the University of the Witwatersrand and the Geological Society of South Africa. And after doing a bit of research on this, is that I fear it's perhaps become a tick box exercise for many people, but it's something you've actually got to live and breathe. And I far prefer the terminology of a social license to operate. And that kind of accommodates to everything. If I look at the work that we did at Rockwell, I'm a geologist by training, a natural scientist. So, of course, the protecting of the environment was right key to me. I didn't have to think about it. I didn't need a consultant to come and tell me you ought to look after the shepherd's trees. I knew it. And it was just one of those things. And the miners didn't dare contravene those policies. So every year we would every year our rehabilitation bill would drop. We were mining vast areas, but we were reclaiming vast areas at the same time. So yes, it's very important to put it into your reports and as Ben was saying, all those kind of things. But it's something you've actually got to live and breathe actually all the time in your environmental actions, in your social actions, in your stakeholder actions. It's part and parcel of being a mining CEO essentially.
I should also say that there was a well-known food delivery company that was floating on the going public, and it didn't fare very well because its ESG policy was not there. And I know a lot of the very large investment funds boycotted the listing of that company. So it's not just the mining industry that gets hit by it. And yes, it is a sort of tick box exercise, but you have to be accountable and you have to demonstrate that. The next generation of investors, the Generation Z, will want to see that.
Yeah, very true. I remember someone asked a question a few years ago: "Where's the supply of cobalt going to come from the DRC?" And I said, "No, it won't happen because the young won't accept it. They won't accept it when they know that the source is coming from somewhere that has bad practices." And it sounds like all three of you have certainly got that as a key priority of your business. As you said, Ben, it's just something that you're going to do, standard practice. It's not something you're going to overly promote. So thank you all very much for joining us today. It sounds like that we have three good companies here that are set up to do quite well when the mining commodities sector does kick, whether it takes 6 months, 18 months, 2 years, I don't know. But the main thing is if you're forewarned, you're forearmed, and you can prepare for it. And I just want to leave a quote from the podcast I did with Alexander Starhill, the commodities investor over in Zurich. He said, "I think it's going to be one of the greatest times ever to live if you're part of it." And I completely agree. And the fear of what's happening in the markets, it is fearful. A few weeks ago, looking at things dropping off, I have crypto, I have stuff in the big indices. It's not nice. It is scary when it happens, and you think, "Oh heck, what is going on?" But I think look to the bright side. We know it always comes back. We know this sector is due its time in the sun again, and driven by the green shift. Honestly, it's going to be an extremely exciting time for investors in this space. I really do believe that. And thank you all very much for coming on today and telling our audience how your investment case really. So James Campbell, the MD of Botswana Diamonds, Ben Turney, the CEO of Kavango Resources, and Lester Kemp, the Chief Operating Officer of Technology Minerals. Thank you all very much for your time this evening, and we will be having our next StockBox event in about a month's time, and I look forward to welcoming people again. But for now, thank you very much everyone, and good night.
Thanks, Mark.
Thank you.
Good night. Thank you very much indeed.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.